All right, what's going on, everybody? What's up? What's up? Is it Friday yet? I'm ready for a Friday if you guys are. That was um that was a lot of fun, huh? A little bit of shenanigans happening. We'll take it. We mention it every week, but if you guys have questions while we're in the stream, feel free to ask those questions, bring up a topic that you want to cover. It's whatever you want to do. That was a lot of fun, huh? So it looks like we're good to go. Everything's recording and streaming where it should be. So we'll do the thing. So yesterday I thought we would talk about relative performance, and it kind of fits the current backdrop since we're in this sort of market dynamic where our thematic plays just really aren't, they're not performing like they used to, right? And it goes in cycles. Sometimes it's a stock pickers market. Sometimes you can, just take a long on anything. It doesn't really matter what it is. You could take a long in it. And then there's times where we have to be very specific and sort of lean into the things that are doing good and they're not thematic plays. That's where relative performance can come in. So yesterday I was going through the emails that I get from TrendSpider, and they had this really nice article about what other places use when it comes to relative performance, and then how they mixed those different tools up, put them all together, and came up with something on their own. And I thought, well, that's fantastic because that's what I do, and it's what a lot of you do, right? We grab some information, maybe put it together with some other information, and then we do something new with it. So I like that. I thought, well, we should cover that. And they had some pretty good ideas on the sort of relative performance that we can do. Generally speaking, I tend to look at the sectors, right? Which sectors are performing well, which ones are lagging, and then where are those sectors? Are they the risk on, risk off, growth, value? And that's generally where I stop. Don't need to go much further than that. But we can go a lot farther than that. We can compare individual stocks against the index, individual stocks against a particular sector ETF, and then stocks against other stocks in the same peer group. And what we would be looking for are things that are outperforming or things that are underperforming the marketplace. You can use that as a way to play the laggards. If they're not moving, if they're underperforming, they may be good credit spreads. They also may have really cheap options that you can buy in case it does start to make a big move. A common market phrase when it comes to implied volatility and expected move is like we talked about last week. When volatility is low, they say, well, it has nowhere to go but up. And if that's true, then running scans to find things with low volatility means you're probably going to find things with cheaper options. You can buy cheap calls, cheap puts, and it's more likely that that particular stock is going to make a big move in the days or weeks, months to come, as opposed to something that already has a lot of volatility because the way the market describes that is, well, if it's high, it has nowhere to go but down. Now we know that those are not true statements. If it's high, it can stay high, it can go higher. If it's low, it can stay low, it can go lower. The market doesn't see it that way. They don't teach it that way, but we know that that's true. So the same thing with relative performance. We can find things with a low relative performance and make the assumption that in the future it will begin to have a higher relative performance, especially if it's on one of the hyperscalers like Amazon, which is what they had in their example. And this, I don't believe you need an account to read this article. So I'm just going to put that in the chat. It's a pretty long hyperlink, but whatever, it gets you there. They also had this other one. If you was just to Google relative strength TrendSpider, it would get you to this relative performance page. So it's both of them. Just kind of read them both, I suppose. So they had 4 scans in their email that they offered. One was relative performance below 5. Another was relative performance above 95. So then you're just catching the most extreme, the ones that are really, really negative or really, really positive. Then they had 2 other scans when a market crossed 80 or crossed 20. And if we look at the chart, you can see where it's red in the bottom, it crossed below the 20, and then it finally came up from below the 20, or it was above 80 and it shows in the green. And then when it finally drops back down below 80, it would no longer be in the green. So it's looking for those cross downs from 80 or cross up from 20. And if you look at the way this Amazon picture is, if we found a stock like Amazon that has a high relative performance, meaning it's above 80 and it's trending to the upside and all of our growth versus value metrics are good, we'd have a lot more confidence in taking a long trade in Amazon. Growth versus value is good, the hyperscalers are doing good, the Mag 7's doing good, and oh, by the way, it's beating the S&P. Yay. Right? We add those and to it. It's this and it's this and it's this. So you can see when the relative performance is above 80, we wouldn't want to take any shorts. Sure, there's a little bit of counter trend trading along the way because stocks need to pull back. But even in that pullback, there was no weakness showing here. And it never really even got weak in that pullback. So fantastic. It told you, don't try to load up on a bunch of shorts. Maybe re up in your longs or continue to hold your longs at that point. So right now they can only do the S&P and the Russell. Of course, on our own, we can use relative performance tools on Thinkorswim, TradingView. There's relative performance tools all over the place, and we can, build our own. So don't feel like you have to run out and buy something like TrendSpider just to have access to this sort of concept. It may not be exactly like this if you're doing it on your own, but that's okay, right? If it gets you in the right area, in the right ballpark, it doesn't have to be exactly like this. It's more of a concept and an idea than anything else that we can take something and measure it against the performance of something else. And we're just looking for the ones that are doing really good or really bad. I did like their time frame. When we run a search, we want to look back over a set period of time. They'll do the last quarter, the last 4 quarters. So those are your choices. One quarter or basically a year. And then you can run it from a tech rank perspective. That comes from using things like Investors Business Daily or stockcharts.com, where they have their scooter rank. A lot of companies nowadays have these different relative performance numbers, even if they don't call it relative performance. Stock charts calls it scooters, whatever you want to call it, right? Chocolate cookies, I don't care what you call it, if it's what it's supposed to be. So it's a good read. At the top, they did mention how others do it and how they borrowed some insight from those other places. Here it talks about Investors Business Daily's relative strength score, stock charts, tech rank, right? So they do mention how they put all the different pieces together. It's a good read in case you want to check it out. For Thinkorswim, it has a lot of tools that are similar to this. But if you were just to search relative performance, you probably wouldn't like what you found, right? It's going to need to be a little more specific than that. And over the years in my Thinkorswim workbook, I have collected and developed indicators for this. So when it comes to relative strength, this is going to benchmark against the SPX, very much like what we were just looking at. It's not going to do the sectors, but I mean, get what we came for. So if we put it on Apple, for an example, set it on the daily, we can benchmark Apple against the S&P. Is it outperforming, underperforming, right? And that's sort of the idea behind it. Of course, we can use that for scans, try to find things that are outperforming or underperforming. And you can see that on average, Apple has a history of outperforming the S&P. It's not a surprise. I think these sort of tools will get a little wonky if you are looking at things like bonds, yields, dollar, crude, those sort of things. It very likely isn't going to function correctly or be very useful. So just keep that in mind. It's not designed for those sort of things. Keep it on equities. You could probably do indexes with it if you want to do something like how's the IWM compared to the S&P, something like that. And if you want to know what natural is or normal, then compare something like SPY. If we compare SPY to the SPX, we get that, right? Which is basically that the SPY and the SPX are the same thing. Surprise. Or if we put SPX up here, benchmark it against itself, we get a natural one. So when you bring up a chart and you want to know how does the number you see compare to the S&P? Well, if we compare the S&P to the S&P, we get a number of 1. So anything above 1 is outperforming the S&P. Say like Google, we've got a 28. So let's see what that red line is. I'm pretty sure I know, but I don't want to say it and then prove that I'm wrong later. It's the relative strength ratio. All right. It doesn't say here, but I bet the ratio is using like a 10 or a 20 period look back. We can always just check. Huh, it doesn't say. Maybe we'll look at the indicator code. Visible data. All right, so it's looking back over however many days you have on your chart or however many candles you have on your chart. That's fair. Now, the numbers that you see are not going to match things like the scooter score or whatever they use at Seeking Alpha, right? You're going to have to get used to whatever platform you use and the tools that you have on that platform. When we think about it, if all we're looking for is things that are in the positive or the negative, Thinkorswim is good. It can handle that. But if we want to dial into more nuanced things, we just don't have it here. We're going to need to hit my Thinkorswim workbook or go to a different tool just to see what we could find in the workbook. It doesn't hurt to bring it up and take a peek. All right, so one of the best coders I've ever seen when it comes to Thinkorswim, his name is Mobius. He built this relative strength indicator. In his words, he said that this is as close to the IBD version that you'll ever get when you're using Thinkorswim. So if you want to import this one, I'll just put it in the chat. And then there's the actual relative strength. Now I adjusted this a little bit. I added some colors, I added the label, but it's his, right? It's his code. I just put lipstick on a pig. This is running both the primary and secondary equities to a common range and then, plot out the relative strength. So there's that version. And, the idea here is if you don't have to buy something like TrendSpider, then, why would you? If you can, find another way to do it. Now, I know we got a lot of TradingView people in here. And if you don't have Thinkorswim, you can try to create these on your own on TradingView, or I'm sure they've already got some on TradingView. So you could hit it up and see what they have on there. I'm pretty sure they've got some relative strength tools. No, it wasn't last month. A few months ago, I was reviewing the new tool list on TradingView, and I came across something that was really robust when it comes to relative strength. But if I remember right, the handicap that I didn't like is that you had to tell it what you were going to benchmark it against. It wouldn't run a scan because it's a trading view issue, right? Like I've had a hard time getting this thing to look at my watch list. It always wants to look at an index or, something like that. So that's kind of a hang up. Let's see if we can find my relative strength. Might be this one. Yeah, there's the industry group. That Euler's loop isn't going to be very helpful. Index generator, that's the one where you had to build out your own. So we'll just bring that up for a moment. I put the couple of stocks in there for comparison. That ain't going to get it for us. This one, however, I've got Apple showing on the top. And so it knows that that's telecommunications equipment. I might argue with that, but whatever. We'll expand that for a little bit. We start to zoom in and we'll find peers of Apple. So MSI, CIEN, Garmin, Cisco, UI, Calex. I kind of disagree with the names that it found here, but you see the industry group strength as a group. How's this industry doing? Let's put something else in there. Maybe Bank of America. We'll look at what it does for the industry group strength here. Got to give it a moment. It's got to think it over. We'll open that up a little wider. Sure, there we go. We got banks, right? Bank of America, Citigroup, Wells Fargo, Capital One, JP Morgan. Sure. And banks are doing good, right? So it's a pretty handy tool. You can find peers, see how the industry is doing overall. which ones in that industry are stronger or weaker. And once it gives you the names, you can, of course, use that to hunt around. We were looking at Bank of America, but we can see that Citigroup is doing better or that JP Morgan is even better. So maybe we just jump over to JP Morgan, right? Since it's showing us that that one has a stronger relative strength. Got to let it load. So sure, there we go. All right. So not bad. Pretty good tool, all things considered. The Euler's loop is all right, except that you have to feed it your markets. So, here we've got Nvidia versus the S&P, the Nasdaq, and then the Mag 7 and IWM. So the indexes, the Mag 7 group, and very specifically just Nvidia on its own. I think they're swapping out FNGS, so we could probably swap that one for MAGS. Probably be more relevant. Uh, let's do that. Oh yeah, and now that we've done that, we can see that they're all in the same box. You could really see that turnaround today, though. Ah. And of course, to keep it from getting too muddy, load it more than once. And that way, these are the sectors: XLP, XLY, XLU, XLF, yada yada yada. It's the sectors. I keep them separate so that they don't muddy the water with whatever else I'm looking at. If you haven't seen this grid before, it's a grid like this, and then we've got these four sections. And the article that comes with this will describe those sections in really good detail. They got pictures. Well, here they got a little key code now that we're zoomed out. Volume and price both up, volume down and price up, volume and price both down, or volume up, price down, right? And that's the four boxes. Of course, it matches the time frame that you're on. There's a lot of tools out there when it comes to doing this sort of work, right? So always, poke around, see what you can find. I found a lot of these tools just by monitoring the new tools that come out. That's a good tip. Someone just put in amphibian trading and Trader Lion have good indicators for relative strength. So I mentioned keeping track of the new stuff that comes out. If you go to community, you can see the editor's pick or the top ones or the trending ones. I don't know how often they update this list, but usually every other week or so. Usually, it's a quiet day. We're kind of sideways. I've got a few minutes. I'll poke around in here and see if something new showed up. You know what I mean? It's not like I'm sitting here every day looking at the list to see if it changes. But I've found some really good nuggets over the years from doing this, especially in the editor's pick, right? If it's in that list, it's usually find some good stuff. I'm not a guy that trades with indicators, for entries or exits or that sort of stuff, but using indicators or tools to help weed out things that I don't want to trade or help me find things that I might want to trade, that's exactly what I want to use them for. So just shop around in there. Who knows what you're going to find, right? So this is pretty good. You can do relative strength of a particular stock, of an index, on down from there. You got divergences, relative strength of volume. All right, I can see where you're going with that. Scatter plots, it's going to be a lot like that Euler's loop. So a lot of choices to work with, right? That can help you narrow down your search or your focus. And one of the things is whether or not it's really low or it's really high. Those are the two extremes that they talk about in the article. If I bring it up, this is what I found interesting and I thought would be cool to look at. If I run that scan and we look at the greatest list, it's things above 95%. You'll notice that there's a plus and minus in the group, or at least yesterday there was when we were having a good, clean, normal day. Today it's kind of negative. It's not such a two-way street, but there are some positive ones in here. They're both above 95, right? All of these are above that 95, but some are positive on the day and some are negative. The interesting part yesterday, this list was almost half and half. So there's what, 20 names here, 30 names. Um, Half of them were red, half were green. If we're topping out, let's put it on Netflix. We can see Netflix, it's topping out. It's at 98%. It's solid. It's green. And it's not done yet. It's still green. So the stock is still green. The stock is still going up. Relative strength is still really strong. We would not want to short this. This would be a continuation play, not a reversal play. But if we look at one of these other ones, say Dollar General, for an example, this thing has been just a turd, right? They keep getting sued. They still have issues that they haven't fixed as a company. Their stock is continuing to be beaten down. And sure, we got a higher high, but we've got a lot of work to do before we would think that this is a good swing long, right? And so while the relative strength is high, it's already pointing back down, and it's very likely going to be another one of these where we go back down again. So when we run the search and we get the high list, not all of these are going to be continuation names, right? We have to go in and kind of pick and choose which ones we think are going to be continuations or which ones are reversals. Palantir, for an example, that's still a continuation. As much as this thing, everybody says, "Oh, that's it. It's reached its limit," and it just keeps going and going and going, like Abercrombie did. It just keeps going. So relative strength in the 99th percentile, and it's not done. Or crowd, this one, it had a nice run, and then since then, it's kind of been rough. I wouldn't look at this and think that it's a continuation yet. I'd have to see the the chart really kind of give me something new here. Otherwise, that fits the list of a nice reversal. All of these were the above 95. Swap it around and look at the other side, things that are below 5. 25 names. None of them today are green, but yesterday it was half and half. And we've got, I think, UNH was on here yet. Yeah, there it is. UNH was on there yesterday, and it's on there again today. Moderna, Target, Groupon, ENPH. That's another one that's really popular. UPS. So some of these names are going to start that turnaround, right? They're going to come out of the hole. They're going to make another run up and change things around. But it's a big picture perspective, and it's not going to happen relatively soon, right? These are beaten down junk that's got a lot of work to do. if they ever come back at all. And in both of these on the list, it was supposed to help us find things that are like this. It's solid, it's not crossing back and forth, it didn't just get there. Just steady, consistent, holding below 5 or holding above 95. The other list is more active. These are stocks crossing the 20, Hershey's, all right, or LLY, that's the GLP-1 drugs. But you can see a lot of crisscrossing here. It finally fell out after that nice run, and it's not in the dirt yet, but that's what it's struggling with, right? It's very likely if this low doesn't hold, then we're going to get into the negatives and we could stick there. Will we get an end of the day rally? Let's see if we can get the crystal ball out. Is it possible? Yes. It's always possible, right? Because price can do whatever the hell it wants, even when we think that it shouldn't. So there's my 786, and it's the way that I would apply it. It's the way I normally would do it. But let's go ahead and just use the highest high and the lowest low on the day. If we want a rally, we've got to get above 58.86. If we can do that, we can make a run towards 59.11, but 58.92 is a cog line, and that's in the way, and 5900 is the round number, a big options level, and that's in the way. So we've got two significant resistance zones, 92 and 0, and then 11 above that. That's three areas of resistance and this high right here. So we could do it, but we've got to work through every one of those levels on the way back up. Let's see what the NASDAQ is doing. See if it's already running ahead of this. Nope. See it, it's not leading. And so we don't have that as a good starting point. See what else we got. We don't have positive ticks. The weighted AD is still below minus 250. And cumulative tick is still pointing to the downside. Nothing there says reversal. Now, the ticks are just getting above 0 right now. I would want to see a plus 800 at least, or a plus 1000 for a really good signal that says we've got some push that can run us back up on the day. So if we see this stall out like it's doing, that's not very confidence building for a rally back out. If you look at the advancing minus declining issues on the Nasdaq and the S&P, 90 out of 100 names in the Nasdaq are still negative, and 478 names out of 500 are negative on the S&P. We can see that it says extremely negative in the S&P. The financials are a long ways from VWAP, so we could expect perhaps a chance at mean reversion, but we already tried that and it failed. So if we go up now, it won't be because of mean reversion. It would be more of because we get some kind of push in financials. And then we have the NY Fang, which looks a lot like the S&P and the Nasdaq right now, stalled underneath that pivot point. So all of them, the S&P, the Nasdaq, the NY Fang, the financials, they all have to get through that pivot or there is no rally. That's pretty simple, right? And level by level, we can run it back up in the other direction. The buy right monthly index also says we've got that pivot to get through, and US 30 by JP 30 has that pivot to get through. So start with a TRB, trend line breakover. If we can get that, then we can get the half of this range. If we can get the half of that range, then we can get the top of the range. Then we get the half of the total day on level, right? Level by level, all the way back up. That's what I would do if I was trying to run it. Getting in as close to the low as possible, right? So change your time frame if you need to catch the next wick and begin running it back up. If that doesn't work and we cross or close below the midpoint of the last candle, run it short, get back to one, and then go for the 111, 1, 2, 3, 6, and on down the line. We weren't supposed to get that much more negative, right? Remember in the morning briefing, I mentioned we'd get to the 200 day, maybe overshoot that and get to the 10-day. Well, okay, we did that. It shouldn't get any worse than that today. That should be it. Um, if we do get any worse than that, then 5850 is the last line. We don't want to go lower than that today. Then we got like flash crash capabilities below 5850 today. We could go down to 5700 by the end of the day if we break that 50. Could, not saying we will, just it would be on the table. So let's not do that. The TDEX is rising back up too. So a rising TDEX suggests growing concern about a potential crash, and the cost of protection increases. Basically, just says the puts are getting more expensive. This thing uses SPY options in the calculation. It calculates the normalized price of out of the money put options on the S&P. They are 3 standard deviations below the current price, making TDEX a gauge of how much investors are willing to pay for insurance against a major crash. It's handy, especially when you compare it against the VIX, which is how I like to do it. Because if we got the VIX rising, but the TDEX really isn't rising that much, then it's very likely just a short-term play. Um, they're just trying to make money on a short-term play. But if both start going up, then it's running deeper down the line, and they are loading up for insurance, not just a flash crash to make profit quickly in a downturn. VIX is above the historic 1910, so as long as we're above that level, the S&P can continue to go down, unfortunately. But we're not above 20, so the low for the day should be in. We shouldn't set a new low on the day unless the VIX gets above 20. How's that for swagging it? We'll do it this way with the VIX invert so that it's the same as the S&P. It's less confusing that way. Um, just remember that the VIX is invert, so don't forget that later on. And we can see that the S&P is going down and the VIX is not going with it yet. The negativity that we're getting in the markets is not being caused by traders fearful in the market, right? This move to the downside is coming from somewhere else, and it's bleeding over to the VIX as it continues to be weak. good to know. I guess you know the more we know, the more we can understand what's happening. Credit spreads are not exactly rising yet. That little bitty blip is nothing, but they stopped falling. It's a sign of liquidity issues, very minor at this point. Whew. 10-2 spread opening back up, really making a run towards that high again. That's impressive. Growth versus value. The Mag 7 growth value got a little weak, but the broader growth versus value is back up to year to date highs. It's a little odd. We're still in contango in the VIX, but we did turn around. So 1.10 is the half. If we get below that, we will target the low and be 1.0. If we get below 1.0, we are in backwardation, but we're not there yet. And the JGB 10 year is getting a little bit out of control, but it's okay. It's not too bad. The 30-year JGB had some issues in the last 24 hours, seems to have stabilized. And this is a really good representation of the broader market. When this goes up, our market goes up. When this goes down, our market goes down. That's the 2 hour. This is a daily in the middle. It's a weekly on the right side. So we can see the S&P, the NASDAQ, and this tool. They're all three pointed sharply to the downside, but they're just getting started. So if this is going to turn into something serious, it has a lot of room. The rollover started on the 19th. You can see it peaked out right there. I was looking at the earnings this morning. Um, this is for the month, and really, it's a bit of a laggard. We can see here's January of 2025, and we are, of course, in May, right? So we would be somewhere between these two, April and June, July. So there's a bit of a lag here, but it will be updating soon. And this isn't even going to be showing the tariff impact yet. This is what a lot of our market uses, these outdated, antiquated tools. And if you was just to bring this up, curious about, I wonder how earnings have been doing, it looks fine. You know what I mean? Like that doesn't look bad at all. But of course, it is bad. We still see a lot of companies that have not yet owned up to the amount of damage that's coming towards them. And we're not going to see it for maybe another quarter or two, but it's coming. And the market's going to, have to chew on that. Most of the analysts aren't even changing their levels of their targets, their ratings. They're still showing buy ratings, and it's a mess. So the yield is updated for April at least. All these others are still in last year's numbers. And then the capex is better, right? There's April at least. So we'll see. I think the growth rate is broken, and we're going to see how bad it gets. This is the Nasdaq total return. This is the S&P total return. And then this is the S&P total return versus the S&P earnings in a ratio form. But of course, it's got that delay in there too. So, got to keep that in mind. So we've been looking for this higher low, uh, and we got it. Yay. Actually, we don't know for sure that we have it because we have to come up off of the low for it to actually be a low. Otherwise, we're still falling. For today, if you just want to know if we can run back up and we got the levels, get above that 786 again, and then try that tweezer top. It's not really a true tweezer top, but you get the idea. It's the same thing ish. Split the mid if you want of that. We're already above the mid. So relative strength is a pretty fantastic tool, all things considered. And their blog posts that they have, I'm pretty sure you don't need an account to see these. That's why I shared them in the chat. If I'm wrong and you clicked that link and you wasn't able to read it, let me know because I don't want to tell people to come over here and read it if you can't read it. Right? That's not going to do you any good because I'm not trying to get you to buy something, but they've got a good blog post that explains how relative performance can be used in trading and how they used different signals from different websites. It's all really great information. Even better that you don't have to pay to get it, to get the information. Here they used the indicator 3 times on Apple and they just changed the settings within the indicator for each one of them. That's a good one on Netflix too. Crossing back up through the 80 on the relative strength or relative performance. So I've had these guys for years. They continue to update their platform all the time with new tools, new products. I don't know. I really like having it, but to each their own. It's not for everybody. It can be a bit noisy too. When you get a lot of stuff on there and it gets cluttered. I do like they've got this way that your alerts can go to your Discord, and I run private Discords. So I like that, this bot will tell me if there was a crossover of a stock, like SPY 1020 crossover. It'll send me a message in the Discord and say, "Hey, that crossed over." I love that. Yeah, that's awesome. Nice that we have something like that. All right, so to bring it back and do some work without having to pay for something, there's a really good scan using ADX. I don't know if you guys are familiar with ADX. It's an older indicator. Yeah, that'll work. You can use ADX, ADR, maybe ADR would be better. No, ADX. And you can run this scan that will look for ADX that's really low or ADX that's really high. And the idea for a swing trade is you want to find stocks with a low ADX that hasn't yet broke out, right? So you can see like down here we had that low ADX and we had a stock that was still underneath this really big level here. That's like Adam Grimes pre-consolidation breakout. So we were under that level, winding up, and then it, ran up, got hung up again. But if you wonder how to find something before it breaks out, which used to drive me crazy, because all my alerts were finding things that were already broke out. It was already running. That's crazy frustrating. You got to wait for the market to open, and then by the time you get in there, it's already run so far you don't even want it anymore, right? Or it's a big risk. The options are way more expensive at that point. It just sucks. So trying to find things that have not yet broke out, how do you build a scanner for that, right? If it hasn't broke out yet, how do you know it's going to break out? Well, it's more likely to break out if it's in a tight range because that's consolidation, a squeeze, something like that. So you can search for things that are not yet in a squeeze, but that's most of the market, right? That's not going to help. You can find things that are in a squeeze, but by themselves, that's not enough. The ADX is one of those values that is helpful for maintaining a list of stocks that have not had a big breakout and run lately. And the market logic behind that is if it hasn't had a breakout and a run and it's starting to get a squeeze, then it's got the potential to be one of those big breakouts as opposed to something else that already has broke out and run. Let's reset this. I was looking at Sizzle earlier and we had some good stuff on Sizzle, but we'll let that go and look at some of the scans. Acceleration, momentum, bottom fishing. I think you guys might like these. Using volume profile for hourly charts, short term trades, right? Not the long term stuff, 3 to 6 months. These would be more like 3 to 6 days. And it's using the volume profile. So if we're looking at stocks hitting the value area high, the close is greater than or equal to the volume profile's value area high. GM, GD, Deere, IBM. We got some Netflix is on there today, Tesla, Meta, Google. Shoot, that's a pretty good list. They're all at the value area high right now. At least that's what Thinkorswim says on an hourly chart. Oh, value area extreme high on the hourly. All right, let's see. Google is on that list, so that'll fit. It's already came off of it. It's not there anymore. That scan's a little old. Granted, I'm not exactly on an hourly chart, but I'm close. 65 minutes, 60 minutes, it's close enough. This is not timely, right? It's 3 candles late. It's 3 hours late. What's the other criteria? Yeah, value area high from 1 bar ago. I would say Thinkorswim is getting that wrong because Google is not there. That's disappointing. What about Netflix? Not even close. I think I know what's up here. Let's try it's doing my whole chart, right? We want it to do just 1 day. That should change things. That's not even at the high. That's the one thing about Thinkorswim with its scanners, especially if you're using indicators. This is supposed to find things that are at the value area high from 1 bar ago, greater or equal to the volume profile value area high. And that is not it. It's too bad. I wonder if TradingView can do it. All right, so we'll run a volume profile scan. Right now, we've got 13,877 names in our scan list. We got to tighten that up a little bit. What do we want to get rid of? Only the US. That'll help clean it up a little bit. Let's bring it into just the S&P. That knocks the list down. Then we can swap it later. We don't need the earnings. Don't need revenue. They don't have volume profile in the list. See if they have a TPO profile. Nope. They got technical rating though. If you guys want to go back to relative strength, relative strength index, and technical rating, put those two together, you have a pretty good idea for a swing trade too. The volume profile at value area high on an hourly is a good one. I really wanted to run that one, but Thinkorswim is not doing a good job with it, and TradingView can't do it, or at least it doesn't have it in that list. Yeah, I mean you can manually do it, but I mean, come on, right? If you trade the same stocks every day, then sure. Say you're looking at the indexes, trade SPY, the Qs, or you're doing the Mag 7, you could probably get by with manually poking around and seeing if it's on the hourly or not. But you wouldn't want to run a by hand 100 plus stocks every day trying to see what was breaking out on the volume profile or not. So that was the value area high. Let's flip it around to the value area low. I don't think Thinkorswim's going to do any better with that if it couldn't do one. Apple. All right. Yeah. Okay. Apple's there. And KHC. So it seems to be doing better with these names that are down versus the names that are up. ConocoPhillips, ExxonMobil. Yeah, well, that ain't even picking anything up anymore. So on that scan, I've got my own modified version. Mine runs weeklies with penny increments. I'll share it with you guys. You can see it's got a lot more names on the list than that other list had. The other one was only the S&P 500. Mine is weeklies and things that have penny increment options. So let me share this out. All right, so this is a session volume profile on TradingView, and I brought Google back up because it was hitting that list on the scanner. If you're wondering why we want a scanner like this, we want that value area high and the value area low. And the idea that that's usually the edge, um, and we flip off of that edge and we go the other way, right? So if we're finding things that are hitting against the value area high or the value area low, then we can sort them up on what's already made a move for the day and likely for a reversal. You could try to run something that's at the point of control, but then you're looking for something to move away from that when what we're looking for are things that are going back to it. So it's a fair question about the point of control, but run it the other way. If we were at the value area high, like we were in Google, and we start to fall, the question is answered by, oh, hey, well, where are we going? Back to the point of control, right? Like the previous day, and we start to fall, where are we going? Back to the point of control. So if you run the scan the other way and we're already at the point of control, then you're trying to figure out, are we going to go up from there? Are we going to go down from there? Run it this way, and you already know if we're up, we're going down to the point of control, or if we're down, then we're going up to the point of control. Netflix was another one that was on that list today. Visually, I thought it'd be easier to look at on TradingView, so I jumped over here. Thinkorswim has it too, but then I'd have to go in and adjust all the settings to get a volume profile showing on the intraday like this. Now I show these in the pre-market, but it's only showing for today. I show this one every day. The TPO on the right and then the volume profile. So if we look at something like Google, now we're not on an hourly, right? So this isn't a part of the scan yet, but you can run the scan on whatever you like. If we were outside of the value area high and then we break back in, there's our Busby, and then there's our play. Target is back to the point of control. Since this is a 5 minute, it doesn't really line up for a swing trade. It's more of a day trade. But if you're using the hourly and you're on a bigger time frame, yeah, I don't have it set up. I think I did at some point and then got rid of the chart. We made the full ADR. That's impressive for the ES today. And we are at the S3. So that's support level 3. That's usually going to be the stopping point. Remember, 5850 is that line in the sand we really don't want to cross today. Let's not do that, because that sets us up for a possible flash crash. That was a really nice example there. Linreg line, and then finally breaking down. I didn't put the channel on, but if we did, redraw as channel, you could see nice and clean, and there's the breakdown. Textbook. Ain't it pretty? So with a 60-minute scan or a 2-hour scan, especially if you're loading it up with multiple days in that profile, like I run a 10-day profile, things like that, then the value area high can be in a different spot. And you're basically looking for the edges or the extremes and then the breakout from there. It would still be short-term trades though, right? 3 to 6 days, 10 days. Come on, Thinkorswim. It's broken. Very nice. We got to the 111 and we paused. If we get through the 111, then we're going to look for the 1236 and then an opposite candle color. It's kind of late in the day for these sort of measured moves, but whatever, right? It's okay. Now, in the morning briefing, I laid it out pretty well, right? What our expectations were for the day, and if we broke down where we were headed. I'm mostly focused on the S&P in the morning briefings. So I haven't looked for the high or low in the NASDAQ. Four 56, 2456 is the 786. That's a bit higher than I would expect, considering the last pullback was a lot more shallow than that. But it lines up a lot like the S&P. We have two choices: this big or that big for the pullback size. So when we take those and we bring them up here and we set them for a downturn, that's like half of this distance or much bigger. We put that one up here. It get pretty big. So you can do that with the drawing tool. Just snap it and then drag it afterwards. $19,850. If it's the same depth as this last one, get it smaller than that, then you have this other pullback here. And that's just below that green line. Not significantly, but a little bit. Almost on the round number, 21,000. It's close enough. So maybe 130 points lower. That's not bad. We could easily do that today. The problem is the move back up. There's really nothing down there, right? It's what Spot Gamma's been talking about. It's what I keep talking about. If the ES breaks that 5850, there's really nothing down there, right? To kind of help us out. But that gap close at 5700 would help us out. Well, 5680, whatever, you get the idea. We got that.
Hey, Sig, a quick call here from Moonshift. Foolishly optimistic. Target 21, 260, 130 points up, if you dare.
It's absolutely possible. What the fuel is, right? Whether or not we get the fuel to do it would be a completely different story, but it's absolutely possible.
Apart from the yields, I didn't really understand the effects, the impacts of the yields. I'm sorry I missed the beginning, if that happened.
Yeah, I started streaming right about the time that all of this dumped, and I didn't even go look to see what the cause was. I know somebody posted in the chat before I started what the cause was. I didn't even go look. So if I scroll back and see Jay shared the auction, and I mentioned the bond auction can be tricky. So it looks like we didn't have the participation that we expected, and that's what sent everything to the downside. Last week we talked about the tip. It was foreign holders of U.S. bonds, and we were supposed to get that data Friday after the close. And people were asking me over the weekend, "Hey, how did it go? What was the numbers?" I had such a busy weekend, I never even got around to reading the numbers. But I wasn't hearing anything on the news, so my takeaway was, "Oh, it must not have been that bad, or we would have heard all about it." So it's still been a crazy day. I haven't had a chance to go look. If anybody on their own wants to go searching for it, it's called Treasury International Capital, TIC, and it would be Friday's release. That'll give us some information about uh, other nations and what they're doing with our bonds. So that's a big deal. And then tie that in with today and whatever happened to the bond auction today. So even just to get that, because I didn't see it since I was streaming, circle over here and we'll just scroll back a bit and find the chart. There it is. Yeah, we had a wide tail. Right? We always got the think about the bell curve, and then we got tail risk. So if there's 70%, the tails will be on the edges. Indirect seems off. All these numbers seem off. Tell you what, I'm gonna feed it over to AI. Let's just take the whole thing if it'll copy it. Give it to my AI. Those numbers seem off to me. Yeah, it didn't do it. Fine. Thank goodness it can read a picture.
The the overnight futures on Friday were took us down to 21,100 on the Nasdaq, and we just retested it. And I don't know if, well, I'm hoping. Just I'm in a bit of a drawdown at the moment, but I'm not sure if they're going to let the equities fail at that point. Mind you, it's we're getting close.
I suppose you're going to want to keep your eye on the 10 years, see if we actually get into that 5. We took a run and got above 4.55. We made it to 4.58, but turned back really close to 4.6. If that auction does lead us into, a 10-year at 5 or above 5, markets, this is just getting started if that is what we're going to get. So 57 is a nice stopping point for a pause. If we get into 5% on the 10-year, we're going to go much farther than that. For the Nasdaq, this is still showing a really nice continuation. We broke through the 19th low. Seems like we're testing it now. The next stopping point would be just to measure all of this. 2960 is a half back of this range. Or to run it the other way around, and I like this better, use the last big bar or the bar of the range and plot your 111, 1, 2, 3, 6 from that. And when you do, you get 2100 again, it looks like. 20, yeah, 21,010, pretty close to 2100. We've got nothing turning us around. A really nice, clean push to the downside. Lower highs, lower lows, and no flip in sight. So if we do turn around and go back up, it'll be late day shenanigans, last minute shock and awe, not because of any systematic flows that are coming in. Exactly. You said it perfectly. So what, right? We needed that higher low. So you know, to me, this is a good thing. It's giving us the higher low we needed. But if the 10-year gets out of control, we're not going to end up with a higher low. We're going to end up with a lower low. And then that's not going to be so good. We can look at some tools, bring in things like Spot Gamma, Trady Ticks, Volland. They have 0-day tools that could give us some insight if the 0-day options are going to step in and push us in the other direction, say dealer hedging dynamics or anything like that, that could potentially turn us around.
Yeah, that would be very cool. So, you've got Spot Gamma and whatnot. There's quite a few buy orders supporting the level at the moment.
All right, so this is S&P equities. It's everything in the S&P. Both the calls and puts headed to the downside, not helpful because it's the broader market in general. If we tighten that up and we want to look at the QQQ, then we can see it's a lot of chop back and forth. The last big flow push was around 130, and it was at the bottom of that initial drop. We haven't had any really big flow pushes since then, and we're not seeing anything coming in to help the market or save the market now. Even if we zoom into this and really get extreme, we got nothing here. So they're not coming into play save a hoe at this point. We're still above the put wall, not by much, but 510 on the Qs is the put wall, and the key gamma strike. So if price does get there soon enough, that can be a place for us to turn around and start going higher, because they will monetize at the put wall and that'll push price up. It may not last, right? Could give us a push into like an hour or two, get us into the close and maybe 7 o'clock tonight, right? It would fizzle out, but it would give us a push. If we look at the S&P, SPY, oh yeah, it's still pointing to the downside under the put wall. We can see we had a little bounce on the put wall. That's what I was saying can happen on the Qs. We got into the put wall, they monetized, pushed it up. It didn't stick, but it went up $2.50. I mean, it's not bad. And now it's fading out and we're headed to the downside. We are all the way through the implied move for the day too, and that is unusual. It happens,
If
but more.
if you fancy a suicide long, now's the time.
Yeah, I mean, if we're gonna do it, I would expect it to start happening soon. You should start to see the MOCs being announced on Finance Juice too. At least the first MOC should be coming in at 3:30. You know what? The thing about a trade like this, late in the day, everybody looking for this flip and run back up, is when I gauge trades that I'm interested in, I gauge it against, am I willing to size up? And on a trade like this, hell no, I'm not willing to size up. I would do it. Give me 1 or 2 contracts, keep it small. Sure, why not? Right? It's having fun. Kind of like going to Vegas and rolling the dice. Why not? Have a little fun, put a few dollars on the table. But I wouldn't take 8 to 10 contracts in a trade like this with any serious conviction, because there is no serious conviction, and it's late day shenanigans. Possibility of a radical move back up in the last few moments of the day. Always good for a little excitement, like bungee jumping, extreme sports, gambling, but trading, not with my money. Just not interested in it.
Thank you, Sig. Yeah, I'm going to get up early and do the morning session instead because yeah, I'm getting chewed up by the NAS, the New York sessions at the moment.
I do like trading in the morning. I got to admit that so far has been a consistent thing over the years that has not changed. The morning just has more to offer to me, or at least to my style.
It's because I teach in the afternoons here in the UK, so 3 o'clock, 3 p.m. is 2 p.m. Is 10 a.m. your time, and I just I missed quite a lot earlier.
I get that. The FOMO really kicks in. I don't even try to trade between 9:30 and 10 most days. Really between 9:30 and 10:30 most days. So that's not even I don't even look at trying to get a trade on in that window. Plus I'm usually busy in that window of time anyways, so I don't care. But to me that's a high risk zone anyways. You got to use much wider stops. You got to be more quick on the draw for the flow, and things have those really sharp reversals, violent dynamics. There are some good plays, don't get me wrong, but I'm not one to chase the open. I don't care about the open. And that gets rid of a lot of FOMO when you don't care about the open.
Yeah, well, it's gonna I'm gonna turn it around tomorrow and do the morning session, and then stay the heck out of it. Wait for the midday swing maybe, or I don't know. It's tricky because I was teaching when the dump happened a couple of hours ago, and it's like you resent the person in front of you.
Oh, yeah. Yeah. It seemed like when I wasn't full time and I would get a day where I could trade, I'd be like, all right, everybody leave me alone. I got a day. I can trade. I'm going to be home. And something would happen. I would have to go to town for some reason. My wife would need something. Somebody would need something somewhere, and I would miss a move like that. Inevitably, it didn't matter what was going on. I would miss it. It was so frustrating.
It's
I
80
was
points
looking
since
at
my call.
the chart and it just happened. I didn't take the trade. I was feeling like taking it, but everything was bullish on this moment and it just happened like drop, 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 drop. So I was just looking at it.
That offers you an opportunity to design some key elements for the next time it happens. Like what do you need to see before you decide that it's tradable, and and that way the next time you might get an opportunity. We came up, I say we, but I came up with a strategy called the parachute play during Trump's first administration because he liked to tweet in his first one and he would push the market like just randomly out of the blue. Boom, we'd get a tweet, market would make a move like this. Up, down, you never knew what it was going to do. So came up with a strategy that said, okay, if we get one of these extreme violent moves, up, down, whatever it is, that I have a strategy for it. You could give some consideration to what that sort of strategy would be. And to be fair, that was also one of those really low risk plays where you don't put a lot of money on it, you don't size up, and it's more of just throwing something on rather than having any real high conviction in it, but it still gives you a chance to play it. And I mean, if it lasts as long as this one did, then sure, there's plenty of time along the way to have something for you to use to get in. So you could use this as a beginning behavior for setting up a trade strategy. See what that would look like. Say you want to develop a trade. So step one, identify your market behavior. This really extreme fast sell-off, that would be the market behavior that you want to identify. Review the resources and gather new material based on those resources. So, what caused the sell off? Where have we seen the sell off before? Is there a other side where it got really extreme? Sure, 2 days ago, right at the open. Then we can identify previous market behaviors and study them in detail and develop ways to quantify that behavior. How often does it occur? What's the typical payment or movement in that behavior? When it is completely done, what does the entire pattern look like? If it fails to complete, what does the failure look like? What's the risk to reward look like? Once we go through all those steps, how can we identify that behavior sooner? Well, I mean, if it's a tweet or random news, we can't identify it sooner. But if it was something that we can see coming, then sure. Think of like CPI, PPI, we can see those coming. Um, how do we avoid a failing setup? If the setup is working and then it begins to fail, what did we identify for failure to help us spot failure sooner? How can we add to the positive setup to catch it sooner and confirm the setup sooner? And develop a way to enter and exit the trade, take the trade and measure the results, review the results for improvement, any missed warnings or signals or continuation signals and signals to avoid the trade completely. And then you just repeat those steps 6, 7, and 8 again and again and again and again until you tighten it up and get it to where you want it. So really fast review of the process in a trade development. And anything can be a trade. 3-bar reversal, a doji bar, anything can be a trade. You just go through those steps, line it out. So for this one, a swift and sudden drop while all of your tools were bullish, how do you change that and get a chance to trade it without sitting there watching it go and not participate? My
Lovely
answer
input.
to
Thank you.
that, my answer to that is go to a smaller time frame first, because if the market is going to pick up and get really wild really fast, the candles will get too big, right? That one candle is like 100-point candle on a 5-minute chart, 100 points. That's as big as a daily bar. It's completely worthless. It's trash. What do I want with a 100-point 5-minute bar? It's completely worthless. So go to a smaller time frame. That way you can see pullbacks in that 100-point bar that give you a chance to get in and make some money in that. Because I don't want to go smaller than a 5, especially when I'm trading. But we have to. I'm a price action trader. I need price to read. If all I have to read is some big fat 5-minute bar, it's 100 points long, I don't have any price action. I need something else. So I got to go to a smaller time frame. So that can be one of the dynamics that you use is you start to identify headlines that are causing a disruption, immediately bring up another chart with a smaller time frame so that you have something actionable to work with. It doesn't have to be your trade chart either. It can just be your analysis chart. You still have your trade chart somewhere else.
Good news. I stopped to break even.
Nice. You made it back.
Yep, that was £300 down, but I'm fine now.
I don't know
I'm,
if it's
I'm,
gonna stick,
I'm going
but
to stop doing these YOLO trades.
right?
No, I like
I
the morning
mean,
session, the smooth, kind of like, oh, there's a shoulders, I'll take that. And then it pays up. And there's another one. Oh, but the New York is like it's like a Tasmanian devil in your underwear. You don't want it.
yeah, and getting trapped like you were too, it's such a horrible feeling. So it's good good that you got out. Did you get out or did it actually just get you back to break even, but you're still in? And it's curious to think if we're back to your break even, then you probably got in at one of those two spots for a long. That was right on power hour. We'll just be generous and take it from the low. That is 92 points or 0.44% move. 92 points. Just call it 90 points. It's $180 on the MNQ. Yeah, that wouldn't be fun.
Sorry, Sig, I was just looking for an entry there on a pullback somewhere, but yeah, I'm going to be super careful and set the stops to. I'm tempted to try another one there.
So after holding and you were down for 300 pounds, did you get out of that trade at break even? You didn't hold on for profit?
No, I didn't. I didn't hold for any profit. It hit my my entry became the points of control, which seems a running thing, and yeah, I'm looking for an entry just for a couple of pounds.
My trading rules won't let me do that.
Did I answer your question? Sorry, yeah,
Yeah, no,
I
yeah,
exited the trade with I think about £7 loss.
Yep, that I get it. It's funny. I had a not had. I know a guy that was trading stocks and options for years, and I started talking to him about futures. This is like pre-COVID, and he was doing so good with stocks and options. He opened a used car lot, so he was trading used cars, or trading and selling used cars, and that was his jam. It's what he was doing. Loved it. He was good with options, and he said this future stuff is looking great. I like it. It's like the money I make on options on steroids. I make twice as much money. It's fantastic. But he had this habit of riding through the downturns because we're in a systemic bull market. At least we were back before COVID. We would drop at most 5% in the broader market, and then we would rebound and run back up. Maybe it would get nasty and we'd drop to 7% in the broader market, but we would still rebound and run back up. So he would just hold on, double down, add to it on the way down because it's the S&P and the Nasdaq, and 7% is about what we get. And then COVID came along, and he blew up a $180,000 account, wiped himself out trying to hold on the dip through COVID.
I was wondering when the punchline was coming.
Yeah, that was the punchline. Blew himself out of the water. He was a trader for 10 years, had plenty of experience. He grew a company out of the money that he was making from trading. But who could have seen COVID coming? You know what I mean? That was like a once in a lifetime black swan event that nobody could have anticipated ahead of time. And he got it back. He got some seed money the following quarter and started working on it and grew it back out. But he had a pretty rough time, and he liquidated around the late part of February, early March. And if anybody knows the bounce, we bounced for COVID in March. We started running back up. So he just didn't quite hang on long enough. those moves like that that put us in a pickle, they can get a lot worse. And they don't have to come back.
I just feel like
Yeah, I
my
had my worst trade on Friday, and it's kind of like it was so bad that I thought I'm never going to wind in my stop again, and then today happens.
Friday was that choppy sideways. Yeah.
No, the after hours when it dumped 300 points.
Oh yeah, from 21.5 down to 21.3, 21.3.5.
3.5, yeah, 250 points at point is £1,500 for me.
Yeah, that tickles.
Yeah, I got out. Yeah, that's what I thought actually. It was just at that point I was my own entertainment unit. Laughing in every mirror. But the thing was, I managed to hold on and get out for 850 loss instead. But then if I had held until the close of day the following day, I'd have been in profit. I guess your friend couldn't have waited 6 months.
Yeah, he waited until he couldn't run it anymore, and he started getting the margin calls, and it was like he was going to need to pony up his house or his business or lock in the loss. And that's where he was at. And he was like, I can't put my family on the street. If I put my house up and this gets worse, he had a newborn baby, a new wife with that newborn baby. And so he was like, well, I could do my business, but what am I going to do for a job if I put my business up and I lose my business? So he just couldn't hold anymore. What a pickle. And I mean, I'm sure we've all know somebody who's had one of those really bad experiences. It sticks, right? I left a resting order on the dome and missed it when I shut my rig off. That took half an account once. Got filled after hours, didn't even know it was on. Yeah, that sucked.
What do you think the MOC will be today, Sig?
I'm hoping to see it a little heavy, but it it really feels like the market's still waiting on something.
Like
So
heavy positive or heavy negative?
heavy negative. There's a lot of CTAs and vol funds that were supposed to be stepping in, but I'm not seeing them. So it's like, where is everybody? I shared that picture yesterday of the CTA list and how they were supposed to buy in X amount, and the share buyback programs are supposed to be starting back up. The VC funds are supposed to be buying. I don't see any of them. In fact, last week, one of the biggest things were on Monday. What we heard was it was the biggest retail buy side action in like forever. How many years? It's been a long time. So where is everybody? So I'm not expecting uh, a positive MOC. I'm expecting a negative one. But maybe it'll just be really light and there won't be anything positive or negative. It'll just be really light because it does seem like the market's waiting on something. I keep looking ahead at like what's on the deck? What are we waiting on? And well, we got some job numbers. Those aren't the big ones. It's not like non-farm payrolls. So I don't see that being the issue. I don't know what the market is scared about, but it's waiting on something. I just haven't identified what it is yet. Yesterday it was 313 million on the S&P negative and 15 million on the Nasdaq positive. I'll just share these numbers in the chat rather than reading them all off. Here's the MOC for the last 5 days. And if you look at the Nasdaq, it went from like
Yeah, glad I wasn't in that. I wouldn't have got filled or exit.
the number's been trending lower. I think we're going to have another light one.
It pumped 38 points on the MOC. And now it's falling back down again.
Yeah, I have no interest in that. Although I would bet that Jeremy with his 10-second charts probably loves that kind of stuff.
I took a short scalp on that, and I'm out.
Nice.
I'm not confident that it's gonna go up. It's just rejecting the price on the same price point, just over and over again.
I'm in a long. I'm 50 pound up, and I'm targeting 21,260. Maybe I'll just get out. Oh, crap. That went nowhere.
It's nice to see people enjoy all day long trading. I do not participate in that, but there's always something. There's always something to trade. I like how we ended the day. We got two red bars. We might get another one, get a little bit deeper. But all things considered, I want my pullback. I want my higher low. And on the S&P, we have it. We don't have it on the Nasdaq, so I think we're going to get a little more before we're done. The Nasdaq needs to cut that 10-period daily moving average. 20800 on the Nasdaq looks good for the higher low. Maybe we don't get it. I'll stick with the ES anyways and say we did get it on the ES, and we got what I was looking for, the 10-period moving average. That better hold or else. The or else is the green line or the orange one, 57.50. And even if we do, so what? So what if we do drop down there? It's not like we're going to sell off into oblivion. It's just going to be a deeper pullback for a nicer rally and a continuation. I don't think even Goldman is saying we're going to make it back to the highs, but 61, maybe 61 and a half, I think is still on the table by most of those guys. And then we're going to get into the new earnings, the new quarter, and there's going to be a lot more companies not able to hide the pain that they're in. We should retest 56, 55 ish. Good times. No turnaround in sight. I did mention buying some cheap puts on Monday. They very likely wouldn't have paid out very much yet at this point if we consider how far we are from Monday's open. Let's see what we do in the overnight and how the markets grab a hold of this around the world. And here's today's MOC to compare with what I posted a moment ago. If you haven't heard me talk about it, there's a company called Market Chameleon. And you don't need an account for what I'm going to show. They have more than what I'm going to point out, but you can see what I'm going to point out with no account, which is good because it doesn't cost you anything. So up at the top, it has stocks, options, screeners, earnings. You want to go to stocks and then go to stock order imbalance. And if you go to that, it'll show you market on close. Now, they are using a filter because, I can do a market on close, you can do a market on close, and they don't need mine, right? They don't need to record yours either. They're looking for big numbers. So they filter theirs by 50,000 shares or more. And it takes a little bit for them to get today's numbers. So one thing that's cool is you can look back, right? Today is the 21st. We don't have today's, but we can see the last 4 days and what the number was. Is it increasing or decreasing? Was one side heavier than the other? And it just provides some insight. And then it has the companies. And like I said, you're not going to get all the data, perhaps. You can't look, at previous days, that sort of stuff. But for free, you get this. You can run a search on the stocks that are on the list, sort them by the buy volume, sell volume of size. It's more information, right? And I've used this over the years. I've kind of backed away on it in the last 6 months or so, but for a long time, we would look at this every day and look at the number today versus yesterday, what the trend has been doing. We carried a spreadsheet that has probably 3 years of data. Every day we captured this data and put it in Word or in Excel, and it was a searchable document to see, how many times American Express had MOC orders more than 50,000, and was it on the buy side, the sell side? Pretty cool. But there's a lot of work to maintain that document. Since I didn't have an account, we had to just snatch it off the web like this. If you have an account, I believe they have API integration so that you don't have to do all of that. And nowadays with AI too, they could probably figure out some way to do it where it's not a ton of work. but back when we were doing it, it was a lot of work to maintain that document. I don't really come over here anymore. Still, you can see what it was, and you can come in later tonight, say after 5 probably, and you'll see what today's is. So I'll just share this in the chat. I think they offer, yeah, they do. It says at the top, they offer a free trial if if you want to check them out. I've used that free trial before. It's it's a pretty neat site. It's got a lot of neat tools. Boy, that's loud. So that's what I got for you guys. If you don't have any questions, we're going to wrap it up. On Friday, this higher low should be in, and I want to be looking for swing trades to run this up and out. Right, that's kind of the plan. If not, if we're still falling on Friday, then that's fine. We'll put together a list of stocks on what would be good plays for the run back up. Okay, because we're not expecting this to crash and burn. Right, it's just a pullback. So that ought to make for a pretty decent Friday. Sorry about that, Tom. I don't know what's up with the audio issues. Hopefully you guys were able to hear me fine through the day. I haven't had too many problems with audio, but now that you mention it, I'll check, see what I can do to figure out what was going wrong. Yeah, I didn't think there was any problems. You guys are usually really good about letting me know if there was any issues. So I think it was just on that person's. They were having problems on their end, I bet. So all right, guys. If you don't have questions, we're gonna wrap it up, and I will see you guys for the morning briefing. If you don't watch the morning briefing because it's too early, there is a replay. I get it, right? It is done early. That's because I got things to do. I can't wait until it's closer to the open. And so people have told me they miss it because it's just too early in the day. There's a replay. The replay link is in the link when I share the morning briefing every day. So it says right on there, replay, and just click the button. It'll take you to the replay. You can watch it at your leisure, right? There's no rush. Also, if you're interested in UNH, I know there was a bounce. There was a nice chase up on UNH, but it's still a turd, right? It's done. It is completely toast. And I put in, um, I got my hands on some documents. I turned it into a PDF, and then I sent that to Google LP and made a podcast out of that document so that we all didn't have to read this really boring document about UNH. And I put that in the chat earlier. So if you want a nice 15-minute podcast, I think maybe 15 minutes, it might be shorter than that. Check that podcast out. And it's just a AI podcast. So two AI voices talking to each other. It's just a really good way to pick up information out of a document like that. I'm scrolling back to to find it. I didn't realize how early today I must have shared it. Goodness. The takeaway is they're broke, right? Bounce or no bounce, they're busted. So, if you're trading the long on the UNH jump, bounce, whatever you want to call it, be mindful that it's just going to roll over. This thing is not a viable play to the upside, and they're not coming back anytime soon. It's going to get worse from here. I would be surprised if there is still a UNH company in a year from now. That's how bad it is. So be careful if you're running them long. And I get it for a trade, why not? Right? Why not? But short-term trade and play it close to the vest. Friday also, I want to go through Quantum. There's a European company who matches up with what we were hearing from, is it Fortnite or somebody else? Quantum is the game, but we don't have Quantum yet. So there are some companies that are working on protecting people from Quantum, which is really what everybody's racing after Quantum for in the first place, is to be the first to get it so that you can stop others from hacking your stuff. There's companies that are focused on doing that right now. And so even if we don't have Quantum per se, we can still develop companies that are focused on that, on protection from quantum attacks. So we'll talk about that on Friday too. There's a European company with a US ADR, so you don't have to worry about getting a European broker or anything. And um, their stock is a little wild, right? It's really wild, but it's um it's the hot topic, right? If the entire marketplace is focused on it, then that's worth keeping an eye on for some tradable opportunities. So we'll get into that on Friday too. All right, guys. I'll see you in the morning.